Yeah. So if the long-term holders were kind of offloading at 100K, when this is now broken down, who is it that's selling now? Is it the short-term holders, or is this like leverage clearing out? What's happening?
Yeah, so generally speaking, in these kind of events, it's usually short people who bought at the top, generally speaking. There is one phase in every Bitcoin cycle so far where long-term holders are also the ones who capitulate. And that's almost always the bottom, the absolute bottom. And it's interesting because there's two types of long-term holders that sell at those macro lows. Long-term holders who bought at the top of the bull, they rode the whole way down, and then they finally go, that's it, and they chuck in their toys and they walk away and they take a big fat loss, and that's the bottom. But you actually also see long-term holders in profit who take their profits at the bottom because they're terrified it's going to go lower. Maximum complete pain. Generally in scenarios like this, it's going to be short-term holders and speculators. You'll see a lot of leverage get washed out. You'll see a lot of short-term holders get washed out. Look, there's a case to be made that we go into a bear market. I don't think that's true, right? When we actually look at the chop solidation range, and I think that's really important to just keep in mind, that was chopping around, I think for round numbers, 60K is 1.2 trillion market cap, 50K is a trillion, 70K is 1.4. In 2021, we tried to get above $1.2 trillion twice, and we got horrendously rejected both times. We then spent 7 months where every single dip below 1.2 trillion was swiftly bought up. So if I just kind of think about this from a how bad could it go? If we go back to 40K, that's been the ETF's launch. Do we deserve to go to 40K? I don't think so. I think that's an unlikely scenario. Okay, so the next level is, do we go back down to the chop solidation range? If we go to 75, that's still well within the bounds of a typical bull market correction. It's actually not even the worst one. The yen carry trade would have been worse. And by my general checks, the unrealized losses won't be bad enough to break the sentiment of the bulls. It might, but I don't think it will be. So now we're starting to say, look, the lowest I expect it to go would be back down to that like 75 level. And then there's a model that I use called the true market mean, about 65. I think that's going to replace the realized price. A lot of people look at the realized price and say that's the floor model. I think the realized price is defunct now. I think it doesn't actually cap for a whole variety of reasons. The true market means about 65. That's also MicroStrategy's cost basis, and that is the average for anyone. You take active investors, that's the average cost basis. That, to me, if we were to get there, would just be an absolute hellscape of capitulation, and I will not have a single dollar in my bank account if that happens.
I already don't have a single dollar in my bank account.
I know, I'm getting close.
But so when Bitcoin went from that kind of chop solidation range to like 50K to 100K, it basically went straight up, and there was very few coins actually changed hands in between that 50 and 100. So when you look at the chart, I'm no trader, but it looks like there's like what you call the air pocket that we've now got below us. Where do you think it will actually find some support?
That's a good question, because the thing is that the reason that we have these air pockets, as you said, the market just went straight up. So between 75 and 86, there was basically no coins that changed hands. Now, I've actually had a few people ask me this recently on the Substack saying, why does the market want to go there? And I'm like, it just does. This is just the market trying to find maximum pain. We don't know what the demand profile is there, right? And you'll see this quite often in markets. Nothing goes up in a straight line. When it rallies, it usually corrects or consolidates or has to come and back test some level. So think about markets as a confidence machine. We've gone from 50 to 100, which is a $1 trillion to a $2 trillion market cap. The market's now going, okay, we've hit $2 trillion. Do we belong here? And the question is, if we go lower, do the bulls come in and say, yeah, we do. I want it to go back to 100K. Because the more that happens, let's say, for example, we go down, we get to 83 is the bottom, or we get to 75, that's the bottom. And then in 6 months' time, we're back at 100K. How confident are you going to be that if it goes back down to 80K, people are going to step in once again? I would be, and that's what markets are all about. It's about building confidence, and we just don't know what the demand profile is. So if we get a really nice bounce from here, right, or form some kind of chop solidation range down in the air pocket, you backfill all that supply, people who bought high sell low, smart money come in. Markets are just looking for that equilibrium point at all times.
In your newsletter that you dropped yesterday or today, you had a table which was like key support levels. I'm going to pull that up. Could you talk us through that? Because I thought that was really interesting.
Yeah, so the framework of this, I mean, this is me just trying to